Did you know that small businesses are a significant target for the IRS? They recognize small businesses as their largest source of uncollected revenue, largely due to unpaid payroll taxes, also known as employment taxes. In fact, tax laws allow them to padlock the doors of small businesses and confiscate assets, including incoming payments and other revenue, and establishing contact with the company's clients. In additional efforts to collect bad taxes, the IRS has the legal right to collect the amount due from the personal accounts of corporate officers and company shareholders. Employment taxes consist of Social Security, railroad retirement, and collected exercise taxes, and are withheld from employees' paychecks. These withholdings are deposited into a trust fund until the business makes their combined tax payments. The IRS expects to be able to collect on these taxes immediately upon request, as they are withheld on behalf of another taxpayer. If the business can't pay the payroll taxes, the IRS assesses a penalty called the Trust Fund Recovery Penalty, the TFRP. Two penalties are assessed, one on the amount of the unpaid balances of the payroll taxes and the other on the employee's portion of the withheld IFICA taxes, and are equal to unpaid employee tax withheld. Yes, you heard that right. If you owe $25,000 in unpaid taxes, the TFRP is $25,000. The IRS explains the amount of the penalty is equal to the unpaid balance of the trust fund tax. The IRS takes these unpaid taxes very seriously. As an officer or shareholder of a business that owes unpaid payroll taxes to the IRS, they will send you a letter notifying you that you will be assessed in the TFRP. If a response is received within 60 days or 75 days, if the letter is being sent to you from another country, your appeal will be considered. The IRS has the right to assert collection efforts on personal assets that aren't related to the business, which commonly include a lien on your personal property or a levy on your bank accounts. The responsible person or people are those who have the obligation to execute collection and payments. The IRS lists the following examples: an officer or an employee of a corporation, a member or an employee of the partnership, a corporate director or a shareholder, a member of a board of trustees of a nonprofit organization, another person with authority and control over funds or direct their disbursement, another corporate or third-party player. Payroll service providers are responsible parties within a payroll service provider. Professional employee organizations or responsible parties within a professional employer organization. Responsible parties within the common law employer, like the client of a payroll service provider or a professional employer organization. Those whom the IRS deem as wittingly neglectful of making the payments had an awareness of the requirements of the law but ignored them. No intent of malice needs to be present for the IRS to assess the trust fund recovery penalty. An IRS disruption of this magnitude is difficult for many small businesses to survive. At Tax Champions, our licensed and experienced tax professionals are adept at navigating the options available to resolving payroll tax debt. We strive to maximize our 30 years of experience by matching our clients to the most effective program available to them through the IRS. Our hope is that you can sleep better at night, knowing that further collection efforts have been abandoned during our negotiations. Are you ready to get started? Visit our website at www.taxchampions.com or call us anytime at 800-518-8964. We look forward to hearing from you.